Hello and welcome to Macro Mondays, brought to you by David Gockstein. I am your host, Landy, and today is May 18th, 2026, and we are looking at Bitcoin here on the daily. We will discuss some longer term time frames, and we will talk about some of the reason why we're seeing a risk-off rotation right now. The risk-off rotation that I have been looking for, although this may not be the big one, right? This might just be the start of a potential further risk off rotation we shall see in the coming weeks. But for right now, we did have Bitcoin hit one of the primary downside targets that I've been talking about after tagging the monthly overhead resistance at $82.5 to $83,000. And that's something, I've been harping on. The opportunity to head up above there, potentially to 85 to 86 at the big weekly overhead, or even the top side of that weekly area of interest around 89 to 90, was fair game. And honestly, still is fair game, at least as it stands right now for where Bitcoin is currently trading, if this area holds up. And I'm going to talk a little bit more about that today. But as it stands at this particular moment, Bitcoin has now officially hit $76,000 to the downside here on spot. And I am using Coinbase Spot because that is where, a lot of the market is deriving spot price. You will see a mixture of spot prices, obviously, across various exchanges, but Coinbase custody is still the big one that the APs use behind the scenes for the ETF, spot ETF creation and redemption units. When they do those and they buy the underlying asset and put it into custody, Coinbase plays a pretty big role in helping to set that up, although they might not be the final custodian. In this case, it's very clean price action for spot. And coming down to the $76,000 area, I mentioned on Friday, after we saw the big sell-off here, after a little bit of a retest of the highs, we got the move back into the 78.4 to 80,500 to 700. And I mentioned that anywhere really below $78,000, I would be looking for the area in between here to the top side, right around $76,000. Now, this is a daily area of interest to pay attention to, between 76 and 74. And if you look, the last time that we got a trend break, we came into this area, got some fills, and then came back up, tested the basically 78 to 80 before moving on to the monthly at 82.5 to 83. Now, just to show you how clean Bitcoin price action is, inside of this zone here, you'll see that this low on that daily hit, between 74 and 76, right? It's $75,000, essentially $74,900, which was the close open over here. So again, Bitcoin playing very technically, very methodically, and me dropping things on my keyboard. Forgive me for a moment there. Sorry about that. And, it's just something to pay attention to. Bitcoin loves to play the higher term time frame levels on the daily. Now, that being said, Bitcoin is in a good position that if we do see a bounce from here, what do we want to see from the bulls? And that is going to be a recovery of the 78 to 78.4 overhead resistance at the weekly. Start to trade above the highs here at around 79.5, which just so happens to be the last higher low. If you look and just like we had perfect tag of the close open over here, when we look at this higher low that came in over the weekend, that's a perfect retest of the prior week's highs. And this is where, when I say the Bitcoin plays really clean, it plays really, really clean, especially on spot. Now, that might not always be the case on perps because of where those pockets of liquidity are, but on spot, it definitely plays very, very cleanly. And realistically, in the shorter term timeframes, if you do see Bitcoin pushing up against 78 to 78.4, look directly to this overhead resistance where this higher low is at around 79.5, and then start to look towards that 80,000 to 80,500 to 700 at the weekly overhead. Why am I being more granular with this? because Bitcoin has shifted structure, right? We have, in this case, a break of the uptrend here, and we have a lower high, and that is a trend shift. And what we need to see is Bitcoin recover above, for the bulls in this case, we need to see Bitcoin recover above this 70,400 to 80,500 to 700 to actually retest this big monthly area that was just tested around 82.5 to $83,000. Then there is the potential on any breakouts to start looking towards 85 to 86K and potentially even to 89 to $90,000. But if we see Bitcoin lose this downside zone of interest on the daily, especially falling out of $74,000, well, it can still technically save itself around, like the 73.5 area over here. I really would be looking right down to the next big area, 70 to 72.2. It's really around 70,500 to 72.2. You can call it, 70 to 72 essentially. That's where I've said the rubber meets the road, because anywhere below there, it's really an SOS. Around the 68 to 69,300 area right here on the daily, where we got the original tag of $65,000, big weekly level, big prior. Of course, this is the now weekly higher low that we have, but this was also the first high from 2021. And if we do start to see that area lost to the downside, that's where we have to entertain trips to 65 to 62.5 and potentially even the low again. And I would keep it as a zone around 58 to 60K. Anywhere below there, we're mid 50s and probably upper 40s to 50s thereafter. So Bitcoin still has a chance here. It's really about watching the 74 to 76 area and how it reacts and seeing what Bitcoin can recover if it does start to bounce from here, what it can recover to the upside, especially on daily closes. On daily closes back above 78.4, we're probably looking at that 79.5, $80,000 pretty quickly thereafter. And then we can entertain maybe a move back to the highs and potentially higher. Now, there is a lot of confluence for that, but there's some caveats with that confluence on the initial read on something like that. And that is that we do have a band setup that is now presenting pretty much the next phase that will likely result, right? And depending on where Bitcoin goes next. If we do see further downside, I would be very aware that if we start to break down below $76,000, that's expansion into this support area of interest between 74 and 76, between the lower second and lower third. And if we do see a breakdown, it'd be an expansion into that, that area where I say the rubber hits the road, or right around 70 to 72 and potentially more. So it'd be expansion into the initial support area of interest. And then continuation would be expansion into the next area of interest to the downside. Same goes for the upside. If we do see Bitcoin start to get back above the basis band, right around 79.5, then we could see the top side of this weekly potentially back in play around that 80,500 to 700, right up to that upper second standard deviation by the monthly at 82.5 to $83,000. Any closes above there would initiate expansion up to the next big area. I would look for a price replace band around $84,000, but that's really where I'd start to consider 85 to 86 up here at the next overhead resistance on the weekly to be fair game. And then anywhere above there, continued expansion up into the 89 to 90 area. And that's going to be very important to watch, because right now the band setup for volatility is basically in a range. And it's very clear that if we start to break down from 74 on the bottom side, that we're going to get expansion to the next zone, 70 to 72 or thereabouts, or potential continuation even lower. Same for the upside, back towards the high here of this particular move around that monthly. We'd be looking for continuation of expansion up into the next weekly zone, somewhere around that 85 to 86, 89 to 90. Very, very, very clear, very simple setup. In my personal opinion, and it is conditions based, right? We need to see daily closes to confirm or get continuation to the downside. or recapturing moves, prior back to the upside. Now, when looking at this from a weekly perspective, you can see that things are still in a bearish posturing for the weekly. And I wanted to point out that, while many have talked about and considered and might maybe even definitively told their audiences that this is the macro low, that just simply isn't the case yet. Is it a good candidate? We're going to find out. If it's not the macro low, be careful, because what we're going to start seeing, the longer the Bitcoin is playing between the upper first and lower first that bracket this basis band here, is compression. And that next compression on the weekly is going to define whether or not this can be considered a candidate or a potential macro low, or if it's going to look like we're going to go lower, as more than likely would be in an expansion phase, especially on closes below $58,000 or so, or this swing low over here on the weekly. That would initiate expansion to the next big levels, and that would encompass all the way down to the lower third standard deviation and this swing at 49, and potentially even the lower high from the bear market all the way over here at 48. So understand that would likely kick off to the downside, would likely kick off not just the next leg, but probably sustained downside and carving out price at trying to find a low or a macro low at lower prices. Back to the upside, there is the opportunity that if this gets a compression and we continue to see higher lows in relation to this $65,000 higher low, then we could potentially see a compression in this area. Likely would take a little while, but if it were to break out back to the upside and then take out $98,000, especially during an expansion phase, then we'd very highly likely have a macro low in. Wouldn't necessarily be like a foregone conclusion, but very highly likely, because then we can entertain even higher prices on an expansion phase for the weekly. And now that would be on closes. So swings are permissible all over the place, but on closes is how you gauge expansion for the bands. And for right now, just watch, wait, and be patient and identify opportunity. This next move down, whether it be, a sustained move down, whenever we get a sustained move down and a high painted, which we do now have a high painted, because we did close below the open and swing low of the prior week at 78.2. This is a higher low, higher high structure. So what we want to see is further higher lows that can work their way up to the $86,000 area, which is right around this high here that was holding up the entirety of these closes up here on the initial swing down to 80,000, 80,500 or so. And that would still be a bearish retest, but any kind of break above there, well, that's green means go, because we're probably going to be testing this high somewhere around the 90, the 93.5 region to that $98,000. Otherwise, what we have to look out for is just if there is the possibility that we could get a higher low, rather in relation to the $65,000 higher low that we just saw. And then that would be likely resulting in a compression on the weekly, and then we get to define very clearly the criteria for expansion to the upside or potential further expansion to the downside, which in this case would likely result in another leg down below the $60,000 region. But for the moment, let's kind of wait and see. Let's see what Bitcoin's got in it. Now, for traditional markets, I explained a little bit about what I'm seeing in the oil markets, and I explained the difference between in the post that followed Friday's video a little bit about what you should go and check because when you're on Spaces or you're watching different shows or live streams or different analysis, you might be seeing different oil prices, right? And you might be like wildly confused. You go and you look it up on TradingView, and maybe you go to your brokerage account and you're getting two different prices for WTI oil. This is the July contract that we're looking at here on US oil or CFDs for US oil or even CL1. You're looking at the July contract. So I wanted to come over here. Beware that we're going to be going from dark mode to light mode. So cover your eyes for a moment. And let's go over to CME. And let's take a look at the quotes and settlements. And what you'll note here is that the June contract is at 107.225 and the July contract is at 102.67. That is what the last price was. You can see what the settlement price is as well by going over to settlements. And you can see that the June 26th, you'll see that the settle price is 105.42. And then you'll see 101.02 for the July. So when we go over here, you'll see a little bit of a difference because it's still live trading. But you'll see the last settled price. But essentially what you're looking at when you're looking at US oil, which is CFDs on WTI crude, or you're looking at light crude oil futures, you're looking at the July contract, and you're looking at a rolling contract, right? It's rolling. It's like stitching all of the different stuff together, and then taking the furthest out contract for the next month in this case. And if you would like to see the closest settlement, right? If you're looking for the closest settlement, you can go to, in this case, CLM 2026, and you'll get the closest settlement, which in this case is going to be the June contract. So this is going 1 month out essentially, but this is going to settle, I believe Tuesday is when a lot of this is going to settle. Yeah, for this session, yeah, it's already going to be settled. If I believe, yeah, I'm looking over here, showing settled. Yeah. So you're going to get a few different reads, and sometimes you'll even see like on some people might be reading out like the price that they're getting from whatever aggregator they're looking at, or indexer. And they'll be like, well, oil, it last price was 96.22 or 97. That's because they're looking at the August contract. So I personally have found, if you're going to use TradingView, and for most of the brokers, unless you're specifically looking at specific tickers or specific contract dates, in many cases, when you're looking at CFDs or CL1, you're going to be getting this chart right here, essentially. So I like to use it as the support and resistance zones of interest. And you can see that we have a big compression here on the daily for oil. Why am I talking about oil so much? Because oil is energy in a lot of countries, and most all countries, every country, you need oil. It doesn't matter if you're burning coal, you need oil, because oil is what sustains the supply chains, right? And in this case, what you got to understand about this is that economies are built on energy, and in this case, oil. And oil underpins all of it. It touches everything, and it can either increase the cost of the entire supply chain for everything or decrease the cost. And the higher the cost of oil, the more risk off we tend to see in markets. Now, you might be saying to yourself, markets have been ripping. What are you talking about? You're crazy. Well, that's because of what we've seen in Europe and Asia is called demand destruction. And when you have higher energy prices, you get natural demand destruction, just less travel. You start to see inflation. So you get, a slowdown in the economy, people buying less, they can't afford less, wages aren't ticking up on the weekly to keep up with oil prices or energy prices. So you get natural demand destruction, and then you get, policy driven demand destruction. This can come in various fashions. We don't necessarily see policy driven demand destruction just yet in Europe, but there has been suggestions of like, hey, why don't you stay home and travel less, right? And then you get other things that help further demand destruction, like oh my God, there's a potentially dangerous virus that got, we don't know who went where, and it could be in Europe, and here's these hyperbolic headlines to hit you with. That naturally is going to keep people home. In many cases, even if you don't buy into it, there are a certain amount of people that are going to exercise caution and stay home and travel less and remote into work instead of going to work and that kind of stuff. This slows everything down. And when you get a slowing economy, and when it's hitting Europe and Asia much harder than it's hitting the United States, you get capital flight. Capital flight to U.S. markets where, there's the most liquidity in the world, right? And that is what we have seen thus far in this situation that has occurred with the Middle East and the Strait being, on again, off again, or Schrodinger Strait. And in this case, you do want to keep an eye on oil, because if oil's projected to go higher, which it has been closing higher on the near-term contracts and is now ticking higher 2 months out for the July contracts, and also closed right on a big level. I've talked about this, and it already hit it in yesterday's high. But for WTI, above 102.5, I'm looking 105 to 107. We already got that strike in there. So it's really about paying attention to this 102.5 to $98,000 on the daily. To the downside, I'd be looking right back into 90 to 95. Closes are what's important. If we see closes below 90, then we're probably going to get it dropping into the mid to upper 80s pretty quickly thereafter. Anywhere above 107, 110 to 112 is the name of the game, and anywhere above there is going to initiate expansion back to the overhead resistance 115 to 120 and potentially up to 130. Now, I've said this over and over again. We're getting normalization of shipping for oil and liquefied natural gas. There's still contracts coming through, but we're seeing stable shipping routes emerge that are cutting out the strait from Saudi Arabia and UAE side. But we're also seeing ships come over to the United States to fill up. And we're starting to get alternate routes that are stabilizing. So if we do see a substantial increase in oil costs, I do believe that it would be shorter term in terms of those increased prices, likely in reaction to whatever happens regarding the strait and any negotiations that are going on there, or any conflict that is going on there. That is provided that we do not see Gulf state infrastructure get hit and damaged in a way that would limit supply. All right. And that is what I would be paying attention to. So if we see higher prices, but infrastructure is fine, there's nothing that has happened, or there's, just fears of infrastructure damage, but no verification, it turns out everything's fine, I don't see sustainable higher prices. Same goes for the downside though. Because the floor is set higher, because even though we're getting the normalization of traffic, we have demand that needs to be met with supply. And it takes weeks longer for ships to travel to the United States and back. This also incurs higher fees in terms of the travel time, but also on the insurance side, even if insurance is lower per barrel, so to speak. And I'm cutting out a lot of detail there, but it increases or resets the floor higher. So if we were to see some sort of a resolution, for instance, in the situation in the Middle East, beware that even if prices dive down, they're likely going to rebound back up, because the floor is still set higher, because we still need to see supply meet demand. And it's not an immediate fix just because things are open or fully open and we see normalized traffic through there. You still have this lag time. And a lot of it has to do with like the reality of shipping, right? And you have to understand that will affect things both to the upside and downside. So even if we were to see price dive down, it's likely going to be temporary, because it's not like even if a new glut of supply is available, doesn't mean that it's going to make its way to market immediately. So speculators might drive the price down per barrel, But realistically, that's not going to have its effect until later. And we're going to see likely months of lag time, even if that were to be the case. And if nothing happens and the situation remains the same, then we're just waiting for the supply to catch up to demand via the new readjusted routes. And realistically, everybody keeps referencing the 20% of supply is off the table. It's actually not, because of what Saudi Arabia and UAE are doing and what many other countries are doing in the Gulf states in order to get supply out. And but it still takes time to catch up to meet current demand, and then we need to see exceed current demand to fill those reserves for many countries. So that's a situation that we find ourselves in with oil, and you should be watching it carefully, because if it heads up, we're going to see a further risk off rotation. Thus far, nothing too crazy. For traditional markets, we're looking at, a green day on Dow, right? Because of the rejection at the highs and pullback in oil, we saw a nice little rally in Dow, right back above our line here that it's just flirting with. We did see a run of the highs basically at 50,200. A nice close back above the actual 49.5 region, which does bring back into play 50K and above to the highs at 50,500 to 51K. This is also a compression. So on the daily, what I would be looking for is that, we have a consolidation or compression here. If we do start to see closes back above 50,200, that would be expansion up to the 50,400 to 500 highs. And then likely continuation 51, 51 and 2, 51.5, so on and so forth. To the downside, if we do see the low here broken at 49.3, then we have to start entertaining a trip back down to the upper 48s, so 48.8 to 49K. And anywhere below there, we're getting expansion down further, 48.5 pretty quickly thereafter, and then likely 48 even to 48.850 or 47.850, and potentially even more to start coming down for a gap fill in the 47s and potentially mid 46s. Be aware, this is a compression on the daily, and it's all about which way it resolves on a close over close basis. Same goes for NASDAQ, although it's not a compression. If we do see a drop of the prior, because we have a higher high, we have the last higher low at 28,630. If we do see this dropped, I would be looking for a little bit of a gap fill down here initially at 28K to potentially 28.2 to 3, where the gap is. But we would likely see a further retracement thereafter if that did start to break down. We would just have to see if we got a trend break, where does it bounce to? Does it bounce to, is it a deviation of trend, or is it a lower high, that kind of thing, if it does bounce there. But realistically, I'd be looking down to 27.5. I'd be looking down honestly to 27, this entire structure here, upper 26s to 27 by the lower first, to 27.5, somewhere around the top side of this area right here. Any further continuation to the downside, I'd be looking for a retest of the prior all-time high zone between 25.8 to 26.2 or thereabouts. That would be, and this is where, even if we did see the compression resolve itself to the downside in Dow, that would just be, that would be a mean reversion play for NASDAQ and SPY, which would actually look pretty good for some of the support areas on Dow to the downside. And when looking at the upside, you can see that 30K is in the cards if things do hold up here at the upper second, and potentially more, 30,100 to 200 beyond that. And I wouldn't be looking for the upper third, but it can always grind its way to 31 if it does just continue to grind. So pay very close attention to that when looking at SPY. 730 is going to be the play, and then it's all about the 725 to 730 area, right? 731 here to down to the 720. I would even say 720 to 725, kind of right in this area where we have this higher low that came in at 715. If we started to see that dropped, could it save itself around 710? Sure. But I'd be looking for realistically somewhere around the 700 point region. And if that's lost, we start entertaining moves to 690 to 695 down here, potentially more 680 to 685. This is not necessarily the big correction yet. All right. So I want to make that very clear. Continuation to the upside, we're looking, 750 we already hit. So 755 would be in the cards to potentially 760. And we hit 749.50. So close enough, right? I was talking about 745 to 750. Take it 5 points at a time, 750 to 755. And then above there, because we're likely going to see this at somewhere around the 753. So if we saw this move right back up aggressively, it'd probably be somewhere around the 755 and then 760, so on and so forth. You can see that the upper third is up here at 765 or so. I wouldn't be looking for an upper third standard deviation spike. Honestly, that would be a sell signal right there. But just watch it carefully. A lot of people are really doom and gloom right now. But I would await further confirmation of a trend break and then see where things bounce from. And then we can gauge if we get a trend shift on the daily to a further correction. That would likely result in Dow getting that downside expansion from the compression at the highs. But even right now, you have to be aware that what we saw was a risk rotation within markets, which is why Dow did fairly well today versus, NASDAQ and SPY. So Dow did pretty well because of the risk rotation within markets. And that's what's caused a risk off rotation for something like cryptocurrencies. And just be aware of that, right? And lower second is either going to be a reversal zone or we're going to see things break down below the next low, drop 75, probably going for 74 at that daily area and then going for the expansion down. And you can see that, if we were to drop 75, you're looking likely this lower third stretching out to that weekly at 74. And that's where things get interesting. But I'd give it a chance here at support, see how things react coming into the Tuesday session. Let's check the calendar real quick. This is another dark to light screen, so my apologies. I did not click over to the new week, so let's go ahead and click over to the new week. And for the U.S., we've got pending home sales, crude oil inventories I would keep an eye on Wednesday. Now, of course, I will have the Wednesday check-in out after close. We'll have FOMC meeting minutes with the new Fed chair. Unemployment claims I would keep a close eye on. PMI manufacturing. Natural gas storage is the other one. I would encourage you to keep an eye on onshore storage for oil and natural gas, as we do have a lot of ships coming into the United States to pick up. And that's about it for the really important stuff this week. And that's pretty much it. I mean, I would pay attention to ADP and unemployment, and then natural gas and crude oil storage. So tomorrow you can look forward to ADP, and then Wednesday crude oil, and then Thursday natural gas and unemployment claims. So I would keep an eye on that stuff and see how we see this react here on the daily, specifically 4-hour trend change. We need to see above 78.4 essentially. Nice little bounce wick down into the zone here. What are we looking at? Yeah, there's a chance here that this could try to turn things around and bounce from here. So far, a nice little lower term time frame bounce for those scalpers, but it's not too attractive. Yeah, 80,250 would be the bullish control zone. That would put things right back to north of the upper second, likely pushing $79.5 to $80,000. I would be very careful of overhead resistance, though, if this does start to head back into the weekly here, and then gauge kind of what's going on in wider markets for the risk environment. And with all of that said, that is the Macro Monday for you. Please like and share this out there. I do appreciate it. And of course, if you have any comments, go ahead and put them down below the video. I'll try to get to them and or answer them in the next video. And please join me tomorrow on David's show, the breakdown, where I'll be talking to him about markets and a host of other things at 12 p.m. 12 p.m. Eastern Standard Time. Man, I'm all messed up with time zones still. 9 a.m. Pacific Standard, but it'd be 12 p.m. Eastern Standard. Still can't say it right. And then, of course, on Wednesday, tune back in for the Wednesday check-in, and we'll see where we are on the charts. I want to thank you all and tell you that I appreciate you, and you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.